Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, while the market continues to surge higher, just as we've been telling you it probably will, we want you guys to understand what's happening. It's really important. It's not very good. So let's dive in.
Trade Genius.
All right, Bob. So again, another green day, 8 consecutive green days in a row, over 5% gain. There's only been, I think, 8 instances that this has happened where you have a 5% gain in 8 days consecutively. And we don't usually see a 9th day. So unless we have a record-breaking 9th green day tomorrow, we should see finally some cooling of this move. Kind of plays into the blow-off scenario that you and I have talked about, but it's weird because now we are starting to see also the deterioration in the economy that we expected. So we're getting that disconnect that we talked about, blow-off move, economy rolling over, and it's the LEI. Can you tell us about the LEI?
Yeah, I think Phil's the perfect storm. If you want to throw the chart up, we can show people pretty cool that we actually are decelerating below the COVID low. And there's also a rate of change that is now manifesting itself at great financial crisis levels. Look, we see it everywhere, okay? You know, in terms of defaults and credit usage and employment. In fact, they're going to revise the employment down in September. We've already been notified. And year over year, wages are now negative, Phil. And so if it wasn't for government spending and government hiring, the new job openings would be down as well. And obviously spending would be collapsing across the board. So people are hunkering down. It looks like it's all going to come to a head at the election time. And so guys, right now, yeah, Phil, 8 days in a row, you know, typically when we have a Friday up, Monday up move, and Tuesdays tend to be pullback days. And so we could see a pullback Tuesday, Wednesday, Thursday, and then we could see your juice for the all-time highs Friday into the end of August, front running the Fed. And so that's kind of the scenario that I'm playing. Also, end of August is NVIDIA's earnings report. And so they're front running that move too. And we know there's deceleration in all those areas, Phil. So they may try to run NVIDIA up into that, although it hit resistance today. So I think there might be a pullback in NVIDIA, final push. And then I think then you can really get short the tech. Yield-Max came out perfect timing on their YQQQ product. I think this thing's going to be a winner chicken dinner. And it's a nice way to be able to hold something short and get a yield. And you can actually pair it up with the QDTE that's sold by another company, and you can create yourself a bit of a hedge each other with high yield. So that's what I'm watching now. The market is still, looking in nervous. Energy names still are holding up, although oil's been churning here of late. And then the healthcare companies are doing okay, probably getting ready for fall flu season. But other than that, I don't find too many things to get too excited about, Phil.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads, I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service, we have chat room, we have the algorithms for you, we give trades out every day, we educate you. So go to tradelikeagenius.com, check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, and again, it's another indicator that has confirmed that we're in recession territory. Normally, when you get the rate of change on the LEI, which is a basket of indicators, economic indicators, they use that to create this index and basically tells you whether or not the economy is expanding or contracting. When you get a reading of like point or a negative 6 or 7, that's typically recession territory. And really, you don't want to see any of your LEI index readings ever negative, right? That's a contraction and usually is a forerunner of the contraction in GDP ultimately. So we're well into recession territory here. And, we talk about, I know you go back and forth as to what is the analog. And you wrestle with the 70s, right? And it's interesting because the only levels that we saw as deep as this prior to the great financial crisis, that was the last time we saw these levels when it went pretty deep. But you have to go all the way back to the 70s now to get to these negative readings. So I think it's interesting that, once again, you're getting reminded of a 70s scenario as well as the 07 scenario. And I think the setup into, at least as far as 2007, I think the rate cut setup is very, very similar. I think you're going to see a good chance of a 50 basis point cut in September. I don't think we're going to get it. There were some murmurings of Jackson Hole maybe potentially getting a cut, but I think you'd have to see the rates doing something a little more here. And I don't think we're seeing that, but I do think that September is likely now. To me, it's a matter of do we get 25 or 50? And it's interesting too, Bob, because the labor numbers keep getting revised much, much, much lower. If they were honest with those numbers right off the bat, I don't think the market would be doing what it's doing right now. But I think it's that game that's always played, and why you can get a blow off pop, even though the economy is really slowing, is because they don't give you those realistic numbers and they bank on that revising down. And for some reason, the stock market is okay with downward revisions after the fact. So it's just like the algo game.
Yeah, it's all algos. I agree with you. And people, they only care about what's happening now. Remember, 90% of people are passive investors anyway, Phil. They react so late to information. And the other thing, too, is people trade kind of their life, too. Like, if you lost your job tomorrow, which you won't, so don't worry about that, you would change your behavior in your stock portfolio.
Sure.
Right?
Yep.
If I lost my job, right, I would do the same thing. And I think that's what's happening. Stock market's disconnected from the economy because I think most stock ownership is in like the top 25% of the population now. And so people could be really hurting. But if it's the people that own the stocks are sitting fat, dumb, and happy and making more than they're spending, they're continuing to stay invested, Phil. I think once they start clawing into that, then I think you're going to see a big reversal in the stock markets.
Yeah, I would agree. All right, guys, well, let us know your thoughts on this. Do you think that this time is different, or are we heading into a recession as the LEI index is telling us that we are? Love to hear your thoughts below. If you guys need help navigating these markets, head over to tradegenius.co. Check out our specials. You can get into the room with Bob and I as we navigate these markets day to day. Otherwise, we'll see you guys on the next episode. Thanks for watching. Take care.
Trade Genius.